Right?
Hey, Steve.
Hey,
How's it
all
going, buddy?
right. The whole gang's here. Good. So we got visual on my screen. You got the correct date. Today's the 22nd, trade of the week. Don't know about you guys, but we're liking this earlier schedule a little bit better. 5 o'clock Eastern is a little better than we had before at 7:30 Eastern. So we're going to stick with this format because it's pretty basic and pretty simple and jives really nicely with all of our other webinars throughout the week. So welcome to the Trade of the Week, which I host, and my sidekick Andy riding shotgun. For those of you who don't know, we've been together since '98. We actually answered an ad in a paper by some guy named Dan Merkin who was trying to teach people how to trade electronically, and that sounded cool. So basic history between myself and Andy and Dan. We go back a long way. So happy to be here and be a part of this and watch this cool technology continue to grow. So the disclaimer, as usual, just a reminder, we're not giving out investment advice here, should not be constructed as investment advice. We're not registered brokers or RIAs. If you need that, you know where to find them. You got to go talk to the guys in the suits that charge you a fee to work your money. We're here to just show you some cool technology and answer some questions perhaps. You're not alone with trade ideas. Always like to follow up on this slide to remind you you're in a webinar now, one of 4 of them throughout the week. Additionally, we have the live trading room, which is over about 550 people this morning when I was in there and saw what was going on. Barry Amerson does a great job moderating the room and also helping people with the technology while trading his own account. Not too many people can do it as well as he does, but he does it, and it's a great place to hang out, really. If you're a subscriber or not a subscriber, it's a free room. Everybody in there is looking at the market. We're all using trade ideas. We're sharing ideas. Great place to be during market hours. And then lastly, which is really not listed on here, just as a reminder, the one-on-one session. You know, if you guys are kicking tires and want to buy a 1-month subscription, that will include a free 1-hour session with one of us, myself, Andy, or Jamie. It just has to be scheduled ahead of time, and then we can sit down, share desktops, and really go over a customized plan for you to try and help you get the best out of the software, because we realize, you know, everybody's different. The market is not black and white. The market is subjective. It's not a science. It's an art form, and everybody approaches it differently. So having that one-on-one session, we always get great feedback at the end of the hour on how we really got them pointed in the right direction, and they feel like they're on to a good scenario. So I just want to throw that out there. We don't offer free trials. We do offer quarterly open house. The next open house will be in January, where we open up everything for 1 week. But between now and January, if you want to do a trial, you know, basically, you know, we've got some cool promo codes. Scott's going to share some new ones with you at the end of today. When you take a promo code and get 15% or so off your first month, and then you get that 1 hour of individualized time, that's a really nice value add to get you going for the first month. Not a lot of companies do that. And so after 30 days or so, you'll know after all that whether or not this product it works for you. So please keep in mind that one-on-one training is a really good benefit. Subscription growth continues to move higher. You know, this is where I was brought in. This is where Andy was brought in. The growth continues, and one of the main reasons is, you know, the AI. I've got a little different look for you today. Again, I'm grabbing these screenshots from behind the scenes, our back office secure proprietary stuff. But this particular performance chart goes back to when we first implemented the risk on and risk off dual strategies. So July 15th, I just kind of ran a back query here. The blue line shows the S&P about up to $6 for the year, but this green line was all Holly on the risk off performance. So Holly's risk off versus the S&P, since we really delineated the two in July, still a really nice comparison of separating alpha from the regular market. All right. Agenda today is going to be a little different. You know, we're heading into a holiday weekend, so we're going to talk about the market recap, train leaving the station. It'll make sense a little bit more in a minute. The Holly recap today, the AI was very quiet. There wasn't much going on, very modest finish, not a lot of, you know, really interesting trade arounds, just kind of going through the motions day today, and that's, you know, to be expected every now and then. which might make sense when I talk about, again, what's going on in the market. We have a slow melt up occurring here. Trade of the week was POT, got off to a great start yesterday, kind of a WFT continuation today, but we'll look at that and figure out where the downside is and where to protect ourselves. We'll continue to look at what's working in this market, and we'll show you some price alerts, what's working, what's not working, how to try and stay along with what is working and avoid what's not working, which is a wonderful segue for the real content chunk today. I called it Chasing Junk Moves, and we'll get into that. But there's a whole theory that Andy and I, we've been around the block a few times, and we've seen the shippers, the dry ship things that happened last week. That's not the first time that happens. This type of occurrence will happen often, and they always seem to end the same way. So we want to try and rehash what happened last week in the shippers and some of the things I saw on social media and chat rooms and some ideas for you guys, so when the next time a junk move comes around and you either get one or a few stocks moving in just crazy fashion, some different ways to maybe look at them. And then time permitting, I'm not going to set any price alerts going into the holiday weekend, but time permitting, we'll have an open forum. If you guys maybe have a couple of questions or a chart request you wanted to see, we could try and accommodate that. And matter of fact, before I do that, should I just ask that question right now, Andy? Well, we got a good, attentive audience here. I mean, we're kind of curious.
Sure.
We want to find out who we're talking to, so I'm going to ask it up front before we go through the remainder of the content. You know, it's a binary answer, basically. Do you prefer, and I would hope everybody would chime in on this one, and just a simple one-word answer, do you prefer short, quick trading or slower down, longer-term trading? In other words, are you a manic day trader type, or do you prefer slowing it down a little bit and not averse to taking home some risk overnight and doing some swing trading? All right, so both short, and quick, slower swing trades, short and quick, slow and steady, both, either, both, short and quick. All right, so kind of a hybrid. Yeah, kind of a hybrid. Well, I appreciate you guys giving us that info. Good to know. So thank you for that quick uninformal poll. Let's get into where we're going to go here today, and let's get into what we're going to do today here. I'll start with market recap, and let's just go to the SPY and take a look at the SPY real quick. All right, I took the liberty of drawing something, and I spoke a little bit about yesterday in Jamie's webinar, both in the spiders and the Russell 2000 IWM. This little supportive trend line, as we call it, is basically, and I've seen this, it's my opinion and it's Andy's opinion, we've seen it so many times, so many different types of market, but this is the type of market that's looking at you and saying, the train's leaving the station, we ain't giving you a pullback decent enough to try and get back in. So if you want to get in this melt up, you got to just jump in. And it's evident by these 1, 2, 3, 4, 5, 6 or 7 candles here that neither of them will take out the prior day's lows. They will just continue to just have a little micro trend, and sometimes we call this a melt up, where everybody's like, great, I'm just waiting for the pullback, but you know, sometimes on these particular charts, when the train's leaving the station, you don't get the pullback you're looking for. I mean, look at this, explosive gap, explosive move, another gap, explosive move, another gap, and we're still playing the train is leaving the station. This is a very, very powerful 2 weeks here of price action here in the IWM. SPYs, they joined the party today. Yesterday they took out all-time highs. I got my crosshairs off. Turn them back on. All-time highs yesterday and continued through all-time highs again today. And if we zoom in, we have that same little melt up. The train is leaving the station, and we are not going to pull back and let you in. Interesting that is showing up on the SPY and the IWM. What we're looking at the diamonds, well, that's just pretty definitive. I don't know how much more definitive we can get here in the Dow. We talked about last week how this winds of change are changing on the balance sheets in the interest of fund managers going away from technology. If I type in Q, there's your technology, still kind of a mess, hasn't broken out like everything else. But the industrials, the metals, the steels, the concretes, the heavy stuff. Beautiful action, and you've heard me talk about it before. We like to get up to the level that makes sense, go sideways, grab a meal, grab a hot shower, get some strength together, and then push through. That's exactly what the diamonds, the Dow, in the form of the DIA ETF, did today. So guys, you're not going to hear this very much from me very often, but I'm going to tell you, I'm just going to say it. We're going higher. We are going higher. That's my opinion in the short term, barring any black swan event. Everything I look at here on these indices, including the way the diamonds consolidated today and then broke out with a really nice, there's no way to really dance around it and say, oh, I've got maybe an upward bias. No, I'm pretty confident that we're going to be moving higher in the short term. And I know that's a bold statement, but that's okay. I'll go ahead. I'm prepared to make it. Let's see. So that's it for the general market. Again, the Qs just not participating. They're still they barely made it out of their ranges that we've been talking about for months on end. But the Qs will probably be dragged higher by the IWM and by the Dow. But it's just interesting to note that it's not technology this time that's leading the way. It's materials and industrials and big stuff. Did you have any comments on?
No. What else can you say? It's just an extremely bullish trend. We're going into the holiday season where you typically melt up. If history holds in place, we'll just keep melting up, on to tomorrow and Friday. We'll see. But
holiday light volume, yeah.
Yeah, I mean it looks obvious, and it's hard to argue. You can't be bearish with this tape. I don't see how you can be. So yeah, I mean it's a bold statement.
We had a major catalyst event with the elections and the discussions that are coming along. What is the priority going to be? Where there's talking about tax cuts, there's talking about repatriation of foreign profits to move those money maybe into some infrastructure plays. He's been meeting with some infrastructure people, something we should have done in this country years ago but didn't. So there's a fundamental change in the winds here, and you can kind of see it just in the price action sideways. We knew nothing. Now we know, and now we see a different future going forward with some different possible leadership industries.
I won't buy stocks that look like that. I wait for pullbacks. I wait for my price, and we could go sideways, for a ways, but a lot
of this stuff was not priced in. It was not priced in, and it's still finding its way into the market. Right. So who knows how far the leaving the train station, we're not going to give you a pullback scenarios will go. So that's it for our market. They're closed on Thursdays. They'll be open half day on Fridays. But as Andy mentioned, both the Christmas holiday limited trading and Thanksgiving limited trading, barring any major news out there, history shows that the sellers kind of disappear. It's just kind of a slow grind up. Some of the names get more attention than others, but I'm not going to be surprised to see kind of more of the same than what we've seen. I mean, we look at the spiders today. We had a real good effort to try and bring it back down, but nope, the buyers stepped back in before we could even take out yesterday's lows, not even close, and then just continue to move higher. So that's the market we got. All right, what's next? A quiet day in AI land. Looking over here at the major parent window, we had a few shorts and a few longs. And again, I always like to sort coming into the day which ones had the best back testing strategy, and then maybe focus and give these ones at the top a little bit more weight just because they had some more, better testing. But, we go to the risk off. Holly actually lost 6 cents on every one of her entries and exits to the penny today. Risk on wasn't much different, really. You see the histogram, green, then red, then green, then red. Of quiet, choppy, kind of a ineffective day. Anything of interest on here? There was one chart that I thought was interest. It was putting on the brakes, and it was a short trade, which was working well when the market was pulling back intraday. But like we always say, look left on these Holly trades first. What did we see here? We saw this flag, and then we saw the price go down and then come back up intraday, which is right here. And then sure enough, Holly, which putting on the brakes is kind of a, hey, wait a minute, this is going to be a short sell jumping in the way of momentum. So it really did make all the sense in the world looking at the chart with our human eyes as to why Holly said, I'm going to fade this and go short. And then it continued to deliver some really nice alpha for most of the day. But looking at this daily chart, that's a really nice breakdown. So just don't forget, guys, to look at the daily chart and see what's below. It was all clear below down here for most of the day. But as we'll see later on in the day, what's working and what's not, short selling is not working. Not for very long anyway. Buyers seem to want to jump in and find a way to step it back up. But the point of bringing this chart up again was just to remind you guys, look left, look at the bigger picture. That breakdown through that channel is rather interesting. All right.
And look where it bounced. If you look back over at support, look at support over there. Yeah, it's kind of bounced right there, kind of congestion area over there in the early part of the month. You had it. It's just kind of it's still a very bullish chart if you look at the last month. So I thought VIPs was a pretty good short. That wait for the 8.
Wait for the 8 is always a good one when they work. As a matter of fact, let's do it again. Look left. Zoom out. Look left.
Yep, exactly.
Breaking below support here. So again, zoom out, look left. Can't say that enough. We coined it, and we're going to continue to say it. But when we're evaluating trades, what is the bigger picture? Yes, here's Holly's entry on this little guy right here at this orange line. We had a stock that gapped down and then basically kind of consolidated right here. This is where the 8-period moving average on a 15-minute chart caught up with it, and then the new low triggered, and we had some more alpha. This thing really never even really wanted to bounce. It did close off lows, so again, this could be another type of example. If somebody was taking this trade and not quite sure if they want to keep it or not, you could sell half and still have confidence the way it closed here below major support. This could be the beginning of a 2 or 3 day short swing trade. You never know. But we always try and remind people to look at the bigger picture because these are stocks that are being pulled up that we might not normally see. All right, let's see here. Anything else you wanted to talk about, Holly? It's been a pretty quiet day. There was no real directional bias.
You know what? I really believe that this action we're seeing in the market. I mean, this is when the market's going like this was when you would like to see Holly work. But I think with this parabolic move we're seeing, the setups are just not there. These strategies are devised for stocks that are setting up on a daily pattern and man, I just think some of these patterns are getting away from her, and they're just not a whole lot of setups now. I think once we start maybe digesting, going sideways, backing and filling, whatever have you, I think you'll start seeing more and better strategies developing. But
I think what Andy's saying is this is kind of the backdrop that we've had. Not a lot of volatility. It's just a slow grind and kind of a slow grind melt up. And I guess as we're learning here, it's not the perfect environment for Holly. For the most part, it's been a very quiet week in terms of P&L. So, once again, it's just a lot of back and forth, a lot of shorts, a lot of longs, just nothing really in the right direction today. So, again, reminding people, Holly will never take a big loss. This 30-cent loss was a stop loss. That one went on to be more of a 65-cent loss. This one, same thing, stop loss, stop hit, right about the same thing. Never really got worse or better. So not a whole lot of trade arounds to talk about today on Holly, not a lot of directional bias. Again, I believe I'm in agreement with Andy. We're in kind of a slow, low, volatile, but a melt-up situation here where we're not getting big pullbacks and big contrarian type moves. So we'll see if that changes next week. All right. Trade of the week this week is Potash. Going into the weekend, what you guys got to do is disregard these two candles here. So what we kind of started to see in some of these names was the train leaving the station, not quite really giving a pullback, a really strong looking flag flexing its muscles, and then the basic opening print was Monday. Some really nice follow through on potash, and then you can go back and you can look at the peers. This was potash, Mosaic, and then Mosaic yesterday. Look at what Mosaic did today. That's really gnarly. I mean, didn't see that one coming. What else was another good? Was it CF we talked about? Maybe. CF, also great day. Gap up on Monday, but giving some back. So across the board with CF, Mosaic, and Pot, we got the move we were looking for yesterday, but the way this market is, it can just be dastardly sometimes. It can just do the exact opposite of what you think and then just try and shake you out. We got a perfect gap fill, as you can see, pretty much, and then some. But then the market, the actual price today went and closed right back here at this previous high level. So it basically closed right back on a pivot, we'll see what happens. Pot is respecting the 1827 level. Let's zoom out and see what he's talking about. He's talking about this basic level right here. So we do have to still get through some congestion, but at the time, this was a whole sector that was really starting to move. And remember, guys, with the backdrop, and this was taken directly off of a trend change lubricant, but with the backdrop of the Dow and everything that's bricks, mortar, heavy cement, steel, stuff you can drop on your foot, the agriculture stocks will probably the next tier getting ready to go. So, yeah, we'll see. We will see. Very defined as Nicholas points out, yes, very defined lower end range down here in the 16 level. So that's the level that we had, and it looked like it was trying to break out. It did break out of that level yesterday. Gave a lot more back than we thought today, but still, it's basically pretty much right where the trade was entered. So, did you have anything you wanted to comment on this particular trade?
No, I agree. It used to be the red candles like that would scare me a little bit when you have a kind of an engulfing pattern. But with today's high frequency trading and just algorithmic trading, the pattern is still intact and it's still very bullish. No, it could come back down some more, but I really think this could be ready to break out soon. We actually discussed this trade over the weekend, and yeah, I think these have a potential. Like you see a lot of commodities moving higher right now, and this is a sector that's been kind of, if you want to scroll out and show them the very long-term chart of that, you see this is a sector that's been down in the dumps for a while now, so it's trying to break a major trend there, and if it does get above those levels there,
this would be the answer to the question, what would be your price target? I anticipate, early anticipation breaking these levels, but if we can get the level up here to the $20 level, that's where we're going to see some prior congestion and prior support. So if we're lucky enough to get those prices, these can be the levels in which you can usually sell a third or a quarter or a half and kind of ditch a little bit and feed the monkeys and take the devil and fear and greed demons off your shoulder. Somebody's asking about IPI because they are correct. I did mention that as an honorable mention in the whole potash agriculture sector. It didn't do bad. Yesterday it had a nice move and then kind of pulled back. What it didn't do is pull back with the remainder of the group. So IPI being a very small cap play, if it turns out that you come in tomorrow and CF is ripping and Mosaic is ripping and everybody's talking about the ag sector again, well, the first thing I would do is look into IPI because it could be a second or third tier type runner. You'd like to see it probably get above just as an eyeball here. Not perfect science, but just as an eyeball, I see a lot of resistance around those levels, except for that one wick right there. It'd be nice to see this thing get back above maybe 150. That's a decent number for IPI. So you could maybe look to nibble on some and watch it, or just set an alert for a possible move above 150. But the only way IPI is going to take off is if MOS and the other ones are really moving. So, Yesterday was a great start to the day at pot. It did exactly what we hoped it would do, but sometimes these things come in and sneak back and just, okay, it's going to be a buck and bronco. That's why we try and size our shares accordingly, hold fewer shares, and give ourselves a little bit more leeway on the downsides. So that was the trade of the week for this week, POT. All right, so what's working? I try to touch on this every now and then, and if you guys recall, I did on the 15th, 7 days ago, gave out some price alerts. I'm going to clear out my price alerts because it's time to do that every now and then. But before I did that, I saved it for you guys because I just wanted to, once again, hammer home a visual here. What is working? Well, short is not working. The shorts are not performing, a couple of them that were tried. But when I go to my notes, if you look at my notes, most of these are talking about short float. Trend change lubricant, short float. Trend change lubricant, short float. This is all the stuff that's really been working. And it's not really that surprising if we think about it, huh, guys? If the train's leaving the station in the broader picture, and the people that are still short and stubborn, they're on the wrong end, and they're having to begrudgingly cover. So I'm not surprised to see a whole lot of short covering out there. Ollie, I mean, this was one I was talking and tweeting a lot about. And the reason I liked it a lot is because Ollie, excuse me, that's it. That's all the data we have for Ollie. And Ollie, for some reason, is 42.9% short on 47 million shares. So how do you think these guys are feeling right now? Not really in control. Not really in control. So when you see stocks that are breaking out on all-time highs, and you have a giant short float attached to it, it's really not surprising to see a lot of these short squeeze trades worked. I see another question. Have you covered LC? I think what you mean to say is have you sold LC? LC was the trade of the week from a couple weeks ago, which essentially was live right about here. We got some 2 days worth of nice alpha. It ran into resistance, has pulled back, looking like it was digging in yesterday with a nice green candle at the end of the day, but wasn't real happy to see this candle here today. But in the bigger scheme of things, the entry here is at 616. It closed just below 6, 16 cents out of the money. We're not trying to pick these things for day trades, guys. We're trying to pick these things that have long-standing opportunities. Yelp was one of them back in the past. CWEI, believe it or not, was a trade of the week. All right, it's up 300% since it was called at the trade of the week. So these are the kind of things that we're looking for hopefully, some longer-term type stuff. So a 16-cent out of the money in LC at the moment, being that this is a swing position trade type of time frame, it's not really bothering me. Now, what I don't want to see is really it going much lower and starting to head down towards this gap. If it does, then it's your call. I personally would not like to see it probably get anywhere near close this wick right here, because if it gets close to that wick, it's probably trying to get in and close on that gap. And also going back here, we had some nice support as well. So we'll call it, adjusted 550 stop. Roughly a 50 cent, 55, 60 cent risk in LC. Okay, let's move forward. So back to what's working, right? What's working, what's not working? Well, we know what's working is the short squeezes. And we know what's not working is trying to go short, as evidenced by these two losers down here, as evidenced by the one that I showed you on Holly today that had a good move short, but then the buyers came back in at the end of the day and popped it back up. So all of these are working. So, and they will continue to work until they don't. So I'm going to continue to focus on those. But what I want to do for a quick second here is just I want to delete a few of them. I go down to there, delete those, delete 13 price alerts. Okay, and then everything below down here, let's delete these. 21 selected alerts. So what we're left with is what I gave you guys last week. Looks like one of them did not trigger. FI never triggered. What's going on with FI? FI never triggered. It just never really got close. Okay, so but the other ones did. Gosh darn it! Just hang on a second. Let me.
Yeah, dig it up again.
Yeah. So let's sort. The REN was 29% short on 9 million. I remember highlighting that last week. What we did is we took my squeeze me, and we took my squeeze me alert and looked for stocks that were close to making a new 52-week high. And Ren was certainly one of them. There was the alert. Ren has moved higher. Ren only has, again, 9 million shares in the float, 29% short. This one is very much like that ollie that I called out earlier. What are you going to do if you're a short seller on this one? This thing's quickly getting away from you. Losses can be unlimited when they start making new highs exponentially. So that was the one on Ren. VMW also got from that same thing, that squeeze me, where these were stocks that were high, way up. We're not looking for short squeezes so much down here on this particular strategy, but we're trying to find stocks that are making new highs on a 52-week level and really trying to put our minds in the mind of the short sellers who were in pain. So that green line triggered, and there was some really nice 4 days of alpha there. What was the other one? LPG. I think I recall that one. LPG had a really nice first day, went from like 713 up to 780, then since pulled back and has been kind of wishy-washy, but is bouncing back up. So maybe it's doing what the trade of the week pot was doing. You know, broke out really nicely, but then came back to the scene of the crime the very next day, and maybe we'll dig in and move more. All right. So the last one, what was it? Basically, this was a trend change lubricant stock, just kind of moving up through a level on the lower end, doing its thing quietly. And then the last one was the washout bounce that I had. So here's a great example of the washout bounce candle that I will talk about a lot. And these washout bounce candles a lot of times will run the stops and kind of clear the air for 2 or 3 days of upwards movement. And that's exactly what we got after that washout bounce. So, you know, pretty decent 5 or 6 calls that were given out last week. We'll get back on schedule next week, and we will work on finding some new, what do we want to call them? Position strategies, triggers, alerts. I'm drawing a blank here. But for this week, we're just going to leave those be, and we're going to go on to a new topic. And this is kind of a new topic that I really wanted to talk about last week, and it's coming into play this week. If anybody was alive and trading in the markets last week, we all know that the story of the week was the shippers. And we can probably go through many reasons why they took off, the Dow and the transports, maybe Trump talking about steel or trade, who knows. But for whatever reason, let's just take a look here. Dry Ships was the leader of the bunch because this thing has under 1 million shares, which is ridiculous for a float. And it basically went from $4 to $100 in 1, 2, 3, 4 days. You're not going to see that very often, but we saw it. But what it did was it created all sorts of excitement in other ones. Eagle, okay, Diana Shipping, EC, Navos Marine, Ship, Tops. I mean, let's just go back to Ship here. You know, people were playing. So once Dries was on the board last week, everybody was having a wonderful time making money, buying pullbacks, buying breakouts, and it worked. But these things, I've seen them come and go. I don't care if it's the shipping sector or the nanotech sector or the junk biotech sector or the junk internet security stocks. And when I say junk, I'm usually talking about stuff under $5 or $3, which most of these shippers were. They were in complete junk status. Then all of a sudden you get this resurrection where sometimes it might happen to 1 or 2 stocks or it might happen to 6 or 7. And this was a classic example of the shippers gone wild last week. So what happened was, and what I'm really talking to here, I'm trying to talk to the newer traders. And if you hear any emotion in my voice, it's because Andy and I have both been through this, and we've learned our lessons the hard way over the years of doing this. And we really want to try and save people heartache and money loss to learn from our mistakes and other mistakes in the past. And, you know, here's the mistake. All of these charts kind of look the same. They had 3 or 4 good days of run, and then they put in this one big monster blow-off red candle with a giant topping tail. That's it. That's your signal. It's done. They're over. In this case, it was a difficult one for Dry Ships because it got halted. But in the other ones, let's just take a look. Eagle, big long blow-off candle, long topping tail. That was it. I actually gave you double days to think about this one. Nabos Marine, there's your big, this one gapped up basically, traded higher, and then your giant red candle. This is the signal to you guys that it's over. It's broken. And the hardest thing for us to do is to come back in the next day and load up these 7 shippers again and start looking to buy bounces. Even though the daily chart just told us, yeah, this was fun. Yesterday was a giant blow-off, but if you're going to come in now and you're going to start buying dips, and I saw it on Monday, I saw it on Twitter, people coming in trying to buy dry ships right off the dip, right off the open, you know. And it's human nature, and I don't blame people for wanting to do that. I did it. Andy did it. We all do it. That's where the money was made. So your psyche goes, yeah, let's get back in there and make that money again. But it doesn't last long before we get to the other side of the mountain, and these stocks basically break their back, and it becomes a completely different game. Now, there are guys out there who wait for this kind of stuff, and they're permanent shorties. Some of them probably got really run over last week, and I know a few of them. They're either having a banner year or they're having a really hard dry year. But they come in and they wait for these junk stocks to basically blow off and show the blow-off candle, and that's when they start in. So for you to come in on the next week or after we've had the blow-off candle and start jumping in and saying, oh, look, oh, here comes a bounce, I'm going to buy this bounce. How's that working out? I mean, it's just day after day of failed bounce. Let's look at the 15-minute charts here. Oh, they're just so sad. All these people trying to buy bounces because it felt so good, and I get it. It worked so well last week, but this week, no, it's just not working. Andy's got a pretty funny story to tell you because he talks to a lot of his family members. Why don't you go ahead and share that story you were going to tell?
Oh yeah, I discussed it in my last webinar. If you want to pull up SHIP there and take a look at the daily pattern, and you can see it was on that first screen day. In case you haven't heard it, in my last webinar.
It was this day,
right there.
Yes,
right
thank
there.
you.
Yeah. Yeah, it was trading at 225. It was kind of slopping around, trading at 225. I gave my brother a call and said, hey, you know what, because the other shipper's running, I knew this was kind of a laggard and kind of under the radar. So I said, you might want to buy some of this ship right here. And I told my father-in-law, too. They both get in it. And to make a long story short, they just, did very well. My brother did really well because he bought like 2,500 shares, and he went off to a meeting somewhere and came back the next day, and I'm saying, okay, you better start just selling a little bit at a time here. He sold a chunk up there at $8. And then, and then it starts coming in, and I'm sitting here looking at my text, him texting me, and he texted me 4 times over the next 3 days. Should I buy it now? Should I buy what I sold back at 640? And then should I buy here at 430? And I kept telling him, dude, no, it's over. The trade, great trade. Let's move on. We'll find another one. It didn't matter. He kept just hitting me up, and that's how the human mind thinks. And what they're looking at, you look at a stock like dry ships, and you're going, wow, it was at $100. I can buy it now on an 85% discount, from where it was trading. Maybe it'll go back up there. It's not the way these work. So there's nothing fundamental about this move. It was just all started with the dry ships being such a low floater and a short squeeze on top of, everything else. And yeah, it started just a stampede, the highs. But Steve's right. When they break, I know
there is no re-breaking. It's like, think of it like this way. Think of it like a horse race, making it to the first turn. He's leading down the back stretch. Okay, he's starting to get past into the final turn. He's losing speed. Do you really think he's going to re-brake and run back to the front? No, it's over. The horse race is over. And so to continue to try and buy dips, I mean, if you're adept and really good at it, more power to you. That's great. And that brings up a good point. For a lot of the newbies, this is the first time they've seen this kind of thing. And a lot of them don't have accounts with hotkeys. If you're going to trade this kind of stuff, number one, you really shouldn't be a newbie. You should have a lot of experience behind you. I mean, it's like, Brad from Trade Ideas and myself, we used to skydive back in the 90s, but we did it where we were attached to a leather rope for the first 10 jumps, and then we slowly kind of broke away and slowly learned how to fly. Coming in as a new trader and getting caught up and wanting to trade these things on your E-Trade account where you got to point and click to get out on a market order, if you're lucky, That's like saying, I'm going to put on the wingsuit and fly down the side of this mountain like these guys do these days. It's these are adult swim only type charts, and I just really want to caution some of the newer traders. The euphoria on the way up can be great, but the hardest part is recognizing when the actual trade is broken and no longer buying the pullbacks works, because I've seen this scenario so many times. This is just the latest example using the shippers.
Yep.
What's the next upside breakout level in ship? I don't know. The stock's going to sleep, in my opinion, Nicholas.
Yeah.
I'm not going to even begin to attempt that. Maybe the shippers will come back to life at some point, but I don't believe for a minute that these things are going to re-break and have the kind of week that they had last week.
No,
That's it. It's over. It's one and done. The next segment, maybe it's nanotech. Maybe Elon Musk comes out with something crazy, or there'll be some news, and there'll be some sort of subsector, and they call them the junk stocks because those are the ones that are under $5, and they're probably heavily shorted, and so they seem to have their moment, but they last for just a few days before they roll and take it on back.
Mm-hmm.
Let's see here. I'm trying to answer a couple questions. Do you see stocks I put out? And you need machines to build roads and bridges and highways. You need steel machines. I'm 60, and how to make a wise trades and investments. Both haven't since '91, and no debt in my assets I'm owning. I'm debt free. Good for you, Michael. Not really sure if that was more of a comment or a question, but okay. So Nicholas says, write this down. If it breaks 1038, then we go up. You're talking about ship? You think ship's ever going to get back to 1038? I don't, but that's what makes a market. Two differing opinions. That's what makes a market. If it does. Gotcha. All right, guys. Well, let's take 5 minutes, and spend another 5 or 10 minutes or so, maybe kind of going over an open forum. If somebody had a question of trading, if somebody had a question about how to configure something, or if somebody maybe wants to look at a stock chart, we can spend another 5 minutes or so for sure doing that. Again, normally this is where I would be marking up some charts for next week, but this is a really holiday shortened week. I'm taking off Friday as well, so we'll just we'll get back to those in the future. Yeah, RH, you're right. RH is coming back to life, and it's doing it with great short. 55% short on 38 million float is what RH has been doing. And let's just open it up here. Yeah, so this is looking, again, very trend change lubricant-like. I think in my particular instance, I'm just going to draw a quick markup line to show you that that's a significant level, of course, which also lines up with these levels back here. So, it would be nice to, get a head start, but you're probably going to run smack into some resistance. You could make a case for setting a price alert down here. I mean, this was a stock that was over $100 just last year in October. It's down here in the 30s. But what happens is we identify these levels of pivot, and if you have a high short flow percentage, which in this case is 55%, normally I wouldn't get that excited about a chart like this. But when you know the short float is 55%, that gives you a bit more confidence that there might be some rocket fuel and gas behind it if you can identify the right pivot point and then bring it to your attention. It's probably worth just go ahead and setting that price alert right now. TCL, I'll modify it later, 55%. So I'll give myself that note. Yeah. All right. Let me go back a little bit and see. It's in the questions, Chris. The chat, we haven't really dropped anything into the chat this time. I don't have anything to share this week, so there's nothing that's going to be dropped into the chat. We're just kind of spending a little time here on in the questions. What is a pinch play exactly? I'm not sure, except for baseball. Do you know what he's talking about, Andy?
No, Anthony, I think, was talking about that, but I don't know where he would have seen that. It's pinch plays. Yeah, it's probably is that some sort of alert that you created?
I'm sorry, I'm not familiar with that one. What was that answer?
Oh, discussing in chat room today, huh?
Oh, I was so busy today, I was hardly even in there.
I know. Same
Okay,
here.
so let's take a look. AFGS was a pinch. AFGS. Why am I not getting that? Oh, AGFS, because I'm dyslexic to a horrible degree. AGFS. Okay, pinch play. Bought Friday at 2, okay, down here at 234. So we'll go right here, basically. All right, so yeah, really nice down move. The pinch play, let me just keep reading here. I should see 20-day and spin off from the Dow Chemical. Oh. With Bollinger Bands tightening. Okay. Well, we don't have obviously Bollinger Bands on here, but I can see that the Bollinger Bands were stretched incredibly to the downside. A second day of follow through, which is always interesting. Try not to always maybe buy that first down day. Let the people come home and realize that they have a loser, and there's some follow through the second day. But then some nice sideways action. I mean, for me, in my world, this wouldn't have become interesting to me until basically there at that point, which is the 269 level. Where it goes from here, I don't know. I don't know what to tell you on that one, other than the fact that
you can make it scroll out. Yeah, scroll out a little bit and see if there's any resistance as we move higher here. I mean, it looks like
really not. So, I mean, these are the kind of things where you could maybe look at a 50% bounce from where it fell, do a Fibonacci from the start, and look and see where the midway point is, or you can just probably can calculate it. But yeah, okay. All right, guys, that's enough. We've got some questions in and got some comments in. What we're going to do now is bring in Scott. We've got some good promo codes to talk about, and let's just do that right now. Let's bring in Scott, and I'll bring up my slide sheet, and you can take it from there.
Yeah, thanks, Steve. Good presentation. So to thank everyone for joining us, there's a code, Holly Alpha, all caps. You can also go to your handouts panel and you go to webinar interface, click on the plus. Right next to where it says handouts there on your panel, and there's a download link for you there that also includes our contact information if you need any help or have any questions. So if you use that code this month, it's good for. It takes 15% off your first month or year of premium, or 10% off your first month or year of standard. Now, the big difference between standard and premium is is where Holly, our AI, our backtesting tool, the odds maker, as well as other advanced features like the price alerts that are shareable and advanced windows like RBI, GBI, and basically where all the new technology is located. But there's nothing wrong with standard. Standard has all the real-time data, covers your exchange fees, and both the standard and premium include a full hour of one-on-one training. So after you've gone ahead and subscribed to Trade Ideas, locate the training link inside the support section of TradeIdeas.com and find a good time for training with either Steve, Andy, or Jamie. Thanks everyone for attending. You'll get an email with a link to the replay of the webinar later tonight or tomorrow morning. And if you have any questions, just go ahead and email info@trade-ideas.com, or you can follow Steve Gomez on Twitter at TodayTrader, Jamie Hodges QuantBot, Dan Merkins Trade Ideas 1. Thanks all. Thanks, Steve. Thanks, Andy.
Thanks, Scott. Hey, thanks, everybody.